Can real estate still cash flow in 2026? I'm going to break down the real numbers of a deal that I did in 2024 that I refinanced at the height at a 7.5% interest rate. Let's get into the numbers. January 2024, house came from probate. Lawyer reached out to me, asked me if I wanted to go take a look at the property and make an offer. So I met with the executor. I figured the ARV on the house, ARV after repair value, ARV on the house was going to be anywhere in like the low to mid fives. I saw how much work it needed. I decided to offer $250. Guy didn't take $250. We ended up negotiating a little bit. Came back, settled at $300. Quick little side note. I'm sure everybody in real estate is trying to find more deals, including myself. That's why I'm out here on YouTube. The only reason that I won the bid on this is because when I met the guy, I was just a normal guy. He actually got an offer. I think that was 25 or 30K more, or so he says, from one of the big guys in my area. That was my direct competition. But he just liked the fact that I was a little bit more personable, and I was just normal. I was just, hey, listen, this is what I think it's worth. This is what I'm going to do with it. You know, I'm not sending one of my cronies to go out there and give you some offer. So, like I always try to stay yourself. A lot of times it needs a lot in this business. So, settled on 300. I was hoping the property was going to need around 50. Excuse me. Ended up needing about 75. So, purchased the house for 300. 75K needed to go into it. Let's say it was another, I don't know, let's say 10K, you know, in closing costs and all that stuff. I probably spent another, let's say 5 in carrying costs, and most importantly, I paid an assignment fee to the lawyer. Paid an assignment fee of 10K. Anyone that brings me a deal, whether you're a realtor, broker, lawyer, friend, fan, it doesn't matter. I'm always paying assignment fees. So, all in all, I'm into the deal for around 400K. Probably didn't work out perfectly like that, but that's just somewhere around what I was at. So, go to the bank. I ended up going for a DSCR loan, or you might have heard it as an investor loan. It's a debt to service ratio loan. So you typically lend up. Typically the banks will lend you up to 80% loan to value. I ended up refinancing. I don't know all the technicals, by the way. So if you're looking for like actual numbers to the cent, too bad. Find another video. I ended up borrowing $390. All right. Now, when it comes to a DSCR loan, the easiest way to think about it, if you don't need to actually go and get real numbers, but just so that you can have in your head, figure if your credit's decent and you're looking for a DSCR, if the normal rate you're hearing around is going like 5%, always figure 1% higher. So I go for a DSCR, I get locked in at a 7.5. Taxes on the house were $8,500. The reason why I made a mistake in this deal is I thought the taxes were truly $8,500. Turns out the lady had a some sort of like grant or something. She was able to get them lower. The true taxes ended up being $12K. So didn't really factor that in at first. That's a mistake that I made, but I still think the deal was worth it. So now I'm all into the house, 400K between the construction, purchase price, carrying costs, assignment fee, right? So I'm at 400. I call, get an appraisal on the house. I'm pretty sure the house appraised at 515, right? So spoke with the lender. I'm like, listen, I think I needed 30 or 35 in my pocket to pay back one of my investors that lent me the money. So I ended up borrowing $390. If you need exact numbers and all that, I don't have it. I know that I borrowed $390. I needed enough to pay back my investors and the rest of the money I left in the deal. So I go to the bank, valued at $515. Like I said, they'll loan anywhere like around like 80% loan to value. I end up borrowing $390. All right. Now at $390, it's 7.5% interest with the taxes, the true taxes of $12K. Like I said, I made a mistake. My mortgage on this property with taxes, insurance, everything is $39.40 a month. Not great. Everyone talks about the 1% rule, right? Buy it for $400, you want to rent it for 1%. Ideally, you want $4K a month, right? Not that easy to get that. Now, in some situations, depending on where you live, if you have like a split level or a mother-daughter, if you get the proper permitting, you can turn this into a 2-income property. So here's my mortgage. I'm trying to achieve that 1% rule that everybody chases. So I ended up taking the top level, and I rent the top level out for $2,400 a month. Okay. The back level, like top level, and like the lower level I rent for $1,900 a month. Right. If you see me cut the videos, because I can't do math this quickly. Let's see, $4,300 a month. That's what I'm bringing in my rent roll, right? But now, you see what it cost me to own that house. So $39.40. I'm only bringing in $4,300. You're like, all right, not bad. You're netting a few $100s a month. No. So tenants cover gas and electric. I cover water. So let's put another 50, 60 bucks on there. So now we're at $4K a month. Landscaping, let's call it another 100. So more or less, I'm paying $4,100 a month. That's what it's cost me to own the house. So I'm bringing in 43. It's costing me 41. Not great. But I also didn't buy just for cash flow. A lot of times you see on YouTube someone be like, oh, I bought. You can either buy for cash flow or you can buy for appreciation. In this case, I bought for both. So I knew if I bought it for the right price, that it would appraise, that it would appraise high. And I do have a decent amount of equity in the deal. As you can see, it appraised for $515 in 2024. I'm hoping that the appreciation keeps going up. So as you can see, I've already got plenty of equity in the deal, but cash flow's not really there. What's the expression? Date the rate, marry the house. So I'm hoping that this isn't going to be there for that long. Really hoping I can refinance it and lower that monthly payment. I'm also in the process of grieving the taxes. This is a true, authentic, single-family deal in this current market, right? So I'm not. I see a lot of these guys on YouTube. They'll show you their cash flow, and you're like, when did you buy the house? Like, I feel like every time I click on something, I'm like, how is this 23-year-old making, $30K a month? I'm like, nah, this is a real deal, okay? If you want to just be a normal, small-time real estate investor, that is exactly what I am. This is a real deal. I'm making a couple $100 a month, but a big thing that everyone buys real estate for is the cost segregation studies, right? So I do them on all of my houses. It's a great tax write-off. Offsets my income from my construction business. So that's one other reason why this makes sense for me. So a couple $100 a month in cash flow helps me offset my income from my construction business, and I just truly enjoy real estate. I don't know what it is. It's just that even if I'm only collecting a little bit, it's nice knowing that I have some properties that are going to appreciate. I have a daughter now. It's nice to build generational wealth. So those are the real numbers. I'll try my best to do this on some of my other properties, but to be honest, if I was you, I wouldn't want to hear about my other properties either because I bought them before 2020. So obviously my cash flow is good because I got low interest rates and I bought them when everything was cheaper. But I figured I'd like to show you guys what it really looks like right now. And I'm sure if I had something to sell you, I wouldn't want to show you this stuff because you'd be like, no, why would I want to get into this? It's not really that great. But like I said, rents can go up. Your debt can go down. So in my personal belief, this house is worth it. It's a great one to add to my portfolio. And if you like this video, I tried to keep it as raw and authentic as possible. If you get anything from this, you like, comment, subscribe. If you want to see me go into something a little bit deeper, you leave it in the comment section. Thanks.